Hello, welcome to another video by Indicator Vault. In today's video, I'm going to go over just a recent movement here with the Australian dollar to the Japanese yen. We're starting here on the 4-hour chart, and I'm going to use these three indicators by Indicator Vault here: the logic day trade, 3MA dashboard, and the order block gen. I'm first going to turn on the 3MA dashboard. And we're just going to work with two time frames here. We're going to go from the 4-hour down to the 15-minute. But I'm only really going to have the 3MA on here as our higher time frame directional bias. So you don't always need to, overanalyze higher time frames and such. For this example, I'm just doing the 4-hour. Obviously, daily or weekly, just depending on the kind of trader you are, you can go higher. But we're going to go from the 4-hour to the 15-minute for this one. So for this 3MA dashboard, 3 moving average, I just am looking for when the moving averages are all red or in sync with each other. So when they are, as we can see here with the red arrow, they all get in line, they all get in sync and turn red. And then when we also take into account here, this supply zone, this is confirming that I want to be looking for shorts when price comes back into this zone here. Because we've got the supply zone is hit, and then at the same time we have all 3 of the moving averages in red. And so that is basically just confirming that we should be looking for shorts. We're not going to go back and forth, between buys or sells. We already have our bias that once price gets up here, we're going to be looking for shorts. And then I'm also going to go into here on the lower time frames and point out a trade, knowing that price is probably going to want to retrace and reach back up into this supply zone before it drops again. We could take some low risk buys in this area and catch the ride up. But for those, we're just going to be using the order block gen in the logic day trade. Now here we are on the 15-minute time frame, and I've just got the logic day trading and the order block gen indicators pulled up. Now, one way to kind of use these together is to find the highest probability zones or order blocks to trade from. For instance, let's just show some examples. And actually, I'll just show this by one. The logic day trade, now as I turn off the order block, the logic day trade will typically find higher or wider zones. Now, it's telling you typically this high or this low is going to hold and can be traded from. Now, when you turn the order block gen, if you keep your eye on this area, so I turn that, you see the order block shows up here. When you find an order block nested inside of a logic day trade zone, you want to keep your eye on that order block. Again, not all order blocks are going to be respected, but that's why we are going to try and find the highest probability ones to trade from, right? It's all about probabilities. Now I've got the replay feature here, as the supply zone was created on the 4-hour and looking for a retracement into it. So we can analyze some of this, and now you want to remember the higher time frame is sell. So if you're taking a buy, you want it to be very low risk. You don't really want to be risking as much as you normally would if you're going against the higher time frame trend. So for instance, we have this order block inside this buy zone, and we do see a break of structure here. Now, we don't see price get down all the way to it. We don't even see it get down to the day trading zone. Not that we would be looking for that. We would be looking for the order block. But we can reasonably expect, price to get here. But we don't see it does. So let's take into account that as we now look for other trades. We see here a move up. I believe we do see a retracement. Yep, right to the 70.5 level. So we've got some fib level overlapping with this order block. Wicks into it, never even closes below it, and continues up. And so when you're factoring risk management, let's take this into account as we, again, our bias is we're expecting price to come up here into the higher time frame supply zone. We're expecting a retracement, so we're trying to catch it. So let's say we got in here at that order block with our stop few pips below this order block. And if we have our higher time frame target of right here, that is an incredible 8.45 to 1 risk to reward ratio. So with that R&R, potentially available, that could be something to get into. But again, let's say it hits our stop loss, because we could, again, reasonably expect price to hit here before continuing up. Well, what would that look like? We get in on the order block with our low below the order block, a few pips below it. Well, look at that. That's now over a 12 R&R. So the risk to reward factor is there. Now, let's say if you're risking 1% for a higher time frame, trend sell, maybe for this you only want to risk 0.5% since you're going against the trend. But with this logic in mind, when we're expecting a retracement, specifically into the higher time frame zone, you can look for some lower risk buys up into it. So let me clear these off. And now we're going to get into, as I play the replay feature, the actual sell, the down movement. So you see it, hits it first here, wicks above it one more time, and then we see a big drop. Now, let's take into account this price action. Yes, we see it hit here, and we do see a logic day trade zone, and to hide that, we see an order block zone inside of it. However, the confirmation of a break of structure does not present itself. The low that created its high has not been broken yet. So we are suspicious and skeptical of this high holding. Also, when you just, take into account with experience that usually the first touch into a higher time frame zone is not going to be the absolute high or low. It's usually going to poke above it one more time. So we see that again. We see an order block. We don't see this order block formed inside here until, or I should say we don't see an order block form inside the logic day trade zone until the next order block. So you see I hide it again. They are inside of each other. So this zone has RI. Now, no, it doesn't quite get to the order block. Just falls short of it. Does get to the logic day trade zone. But let's analyze why it fell. Let's take our fib, and we're going to take the range, And again, we see a break of structure here, obviously. This low that created the high has now been broken. So we have our range, the most recent high with the low that caused the break of structure. We do see a wick just about to the 61.8, but it wicks into the premium side of the range. So it doesn't really need to go much higher. As long as it goes into the premium side, it's done its job. And then on top of that, while it doesn't get to the order block, we can see this gap has been filled. Let me get the fib off. Between the top of this wick and the bottom of this one, that's the POI it's reaching for. So in the premium side of the range, while also filling the gap. And so it's done all it needs to do in order to go lower. Sure, you may have missed this one, and it does hit this order block, as we can see there. But this is where, experience will come in and may tell you to get in, not at the precise, order block here, but when you see it's gone into the premium and it's filled the gap, you understand, okay, it doesn't have to reach any higher before it falls. Sure, many times it still will touch that order block, but it's done all it needs to do before it goes even lower. But let's say you missed that one. Now, the risk to reward on this next entry is obviously going to be lower, but there's still an entry that presents itself with the logic I just went over. So, we see here again, sell zone for logic day trading and an order block inside of it. No, it does not quite reach it. But it basically just repeats what I just went over. Put a fib on the range. Comes perfectly to the 70.5, which is in the premium side. And then continues to fall. So it still met the criteria, in the premium side of the range before it would fall. And when price is super heavy, many times you don't get those full retracements into your POIs. But why? I know we're quite low from our original place up here, but when we take into account that this low, when price retraces up into here, this low has not been broken yet. Neither has this low. So now obviously, let's just be conservative and put it at the low end of that gap with our stop above here. Just under 3 to that low. A little over 3.6 to that low. Of course, if you expected that order block to hold, you increase your R&R a little bit more. But so you got in just above that high, which is right around the 61.8. Down to here, about a 3 to 1 R&R, not bad. But these lows, remember, as I go back to the 4 hour, we were framing our trade on the higher time frame. So that's what these lows are. Remember, if we're bearish, we can expect a new lower low to form. And that's what happens. This first one, as you can see, this was an intermediate low. Obviously not the main swing low, which is here. But we tapped into our higher time frame, POI. with just some fib work along with the order block gen and the logic day trading. And then this huge move down, taking out this intermediate low and then ultimately the swing low here. And, another strong push down. So huge move that could have been gotten here just from working with these two time frames, the 4-hour and the 15-minute, and just with these couple of indicators on the lower time frame and just the 3MA dashboard on the higher time frame. So I hope this video was helpful, and until next time, best of luck trading.